In this video, I'll show you how to trade on the Binance spot trading platform, including what everything on this screen means, how to buy and sell, and use all of the different order types. So if you're new to Binance, I'll leave a link below. If you sign up via that link, you can get an extra bonus. I'll also leave links to the other exchanges I use. You can get some great bonuses on those platforms via those links as well if you're a new user. But firstly, if your screen doesn't look like this, then you want to go to settings in the top right, and then up here go to layout, so preference and layout. I just use the advanced layout. This is what most trading platforms in crypto look like. So it's just easy to switch between them once you've gone to the advanced layout here. It's all the same information, but as you can see, this is really what most trading platforms look like. If we go back to settings, you might want to see my preferences as well. You can change this as you want. Most of this is just notifications for different orders that you may put in and stuff like that. So I'll get myself out of the way. You can see everything here if you want to screenshot that and just have the same notifications and everything, but it's up to you. The first thing we need to do is choose the pair of assets that we want to trade. So if you want to buy one asset, that means the other side of the pair is the other asset that you're selling. You need some value in order to sell to buy the other asset, and that's a trading pair. So what we do is search for the asset that we want to buy, and then we just choose the trading pair against the other asset that we're selling. For the most part in crypto, people will on-ramp via stablecoins, so either USDC or USDT. If you've on-ramped cash into crypto, then you buy a crypto asset. If you sell out, most people will just go back into a stable coin. That keeps the value in crypto, but you don't have to hold the fiat currency in your account. It depends which country you're in. A lot of countries will just use dollar stable coins. That makes it a lot easier. So USDC, USDT, and then you can find the trading pair. There are fiat currencies supported on Binance as well. So if you click fiat, you can see them here. In my region, there aren't any. But in your region, you may have euro trading pairs, for example. And so you can just on-ramp your fiat currency, leave it there, and then switch that into crypto assets and back out. That makes it easier to off-ramp. It makes it easier for reporting as well. If you've got tax reporting for profits and stuff, that's going to be in your local currency. So you may want to choose fiat currency trading pairs. For me, I'll just show you USDC pairs right here. So all assets are going to trade against USDC and USDT, the dollar stable coins. So if you've got an asset that you want to buy, you can search for it here like this. So the ticker for Bitcoin is BTC, and then it just shows you all the different trading pairs that we can trade against BTC. I've got some USDC in my account, so that's the one I'm going to sell. On the right-hand side, this is the asset that you're selling, and this is the asset that you're buying. However, you can just click buy, sell on these. So really just think about the trading pair. If you want to buy Bitcoin and you have USDC, you need to choose this trading pair. If you want to sell Bitcoin back into USDC, you choose this trading pair as well. And then you can click on the right-hand side, buy and sell. Now, if you want to trade a crypto asset into another crypto asset, so not a stable coin, you can do that as well, mostly for the major pairs. So you can see as I scroll down, Bitcoin is a trading pair against virtually all assets in crypto. All of the different assets that you want to buy, you can trade them directly from BTC. So if you want to switch BTC into ETH, for example, I can search for that. So BTC/ETH, we have it right here. So if I've got some Bitcoin and I want to take some value from Bitcoin and switch it into ETH, I don't have to go Bitcoin, stablecoin, ETH. I can just go Bitcoin, ETH trading pair and switch them up. And then you can just trade directly. There aren't trading pairs for every single asset though. If you have smaller assets, you won't be able to find the trading pair. And so you do have to sell your asset into a stablecoin, use a stablecoin value to buy another asset. So larger pairs have direct trading pairs. Smaller assets, you're going to have to go in and out of stablecoins if you want to buy and sell and then switch into other assets. For me, BTC USDC, which is right here. So we have this trading pair. This is showing me the exchange rate between Bitcoin and USDC, so Bitcoin and dollars. So we have the exchange rate here, and this is plotted as a chart over time. And then on the right-hand side, this is the order book. So this is the current market for this trading pair. It's giving us what traders are actually paying right now for the asset. So this is essentially the price of the asset in the market. And then on the right-hand side, we can go and enter orders and actually join these traders as well. The price chart of any asset just shows us the exchange rate over time. So on the y-axis, you have price and then time on the bottom here, and that's it. Now, if you're new to Binance, you'll probably see it plotted as a line chart, which is totally fine. It shows us the trend of the asset. So we're clearly in an uptrend right here, right? Because the price is rising over time. So uptrends usually happen in waves, right? So you have a wave up, then you have a pullback, you have another wave up, another pullback, another wave up, maybe another pullback and another wave up, right? So those uptrends, obviously something to keep in mind if you're trading shorter term. If you're trading longer term, you're just going to be buying regularly, once a week, once a month, whatever, for many years. And so the price chart is actually not that relevant over time. The longer you invest, the less relevant the price chart gets. If you're trading more actively, then of course you're looking to buy and sell faster. And so you're much more concentrated on the trend of the asset, right? So if you're buying here and you want to sell within 6 months, you have to be sure that the trend will continue upwards. And there's a lot of research behind the scenes for knowing if that's going to happen, which we can't go through in this video. But for sure, it's more important if you're trading actively. What we want to do really is change this to a candlestick chart. And this is because candlesticks give us much more information about what we're trading. With a line chart, you just get plotted the price. With a candlestick chart, you get 4 bits of information. You get the open and the close. So that's, let's say, a week chart. We get Monday, Sunday. So Monday open, Sunday close. Now, what can happen to the price during that time period is that it may go up or it may go down. And so green candlesticks are when the price moves up. So we can see we opened here, the price moved up, we close, that's a green candlestick. Open, price moves up, close, green candlestick. This one, we opened, price went down, red candlestick because it closed below the open, so that's a red candlestick. You can also change the color scheme here. I know in some parts of the world, the color scheme is actually different. Western color scheme is green and red, but you can change that around if you want. Just gives us more information about what happens during these weeks. Now, if you want to change this time horizon as well, you can do. So you come up here, this drop down shows that you can change the time horizon here. So I'm going to go to a 4-hour candlestick chart, press right click and reset. These candlesticks now are 4-hour time frames. That's better for short-term trading. So for example, in this time frame here, you can see we had a high, then the price moves down, we recover a little bit, but we have a lower high here. We move down, recover a little bit, we have a lower high. That's a downtrend, right? So if you're trading much shorter term, you can use these lower time frame candlestick charts to maybe put in some trades. If you're trading longer term or investing really, then you can look at week charts, month charts even. And actually, if you're just investing and you've decided that Bitcoin is a great asset that you want to accumulate, then the price chart's pretty irrelevant. If you've got a 10-year time horizon, the price charts are irrelevant. You just dollar cost average over weeks or months, and it doesn't really matter what price you're getting in, right? You're just waiting for the growth over time. But candlestick charts give us much more granular information about what's happening to the price over any specific time period. Now we'll get on to entering some orders on the Binance trading system. So right here we have the order book, and this shows us buyers and sellers. So buyers and sellers are in the market, they're showing us their orders. And we can join this if we want as well, or we can take other people's orders as well if we want to trade immediately. So what this order book is saying is that this right here is the current actual price of Bitcoin. That's because a buyer and a seller met and traded. So this mid price is going to update every single time a trade is actually executed. And you can see down here that we have market trades. It's showing us the exact price. It's showing us the amount of Bitcoin that was traded and the timestamp. And red indicates a sell and green indicates a buy. Again, you may be able to change that color scheme if you want. But this is the mid price here. So this is the actual price of Bitcoin, or any other crypto asset is going to be the same. Now down here, these are buyers and they're bidding for Bitcoin. So they have USDC because that's the trading pair that we're trading. And they are showing us their orders and saying, I'm willing to buy Bitcoin, 1 unit of Bitcoin, which is 1 coin at this price. Now we can trade any fraction of a Bitcoin and we can trade any fraction of their order as well. So we don't have to worry about that. You can buy $10 worth. It's absolutely fine. We just quote the price in 1 unit, which is 1 coin. So they are showing us that they are willing to buy Bitcoin at these prices. And the size is on the right-hand side. That's the size of their bids. Now these guys are sellers and they have Bitcoin and they want to sell to USDC. And they are saying these are the prices that we're willing to sell at. So these are sellers up here and these are buyers down here. You can see that the prices are different to each other, right? So these buyers are low. No one's traded with them yet. They've put their orders out into the market and they're saying, I'm willing to buy at this price. But their prices are below the mid price. You can see the highest bid right here is 118, and these guys are cheaper, 117, 116. So these guys aren't going to trade because they're bidding, let's say 114, and someone else is willing to bid 118, right? 117, 118. So they're not going to buy any Bitcoin at their prices because someone else is outbidding them higher, right? So a seller's going to come in and obviously take the best bid or the highest bid here. Same for sellers. This guy is going to get his Bitcoin sold because he's the lowest offer, right? He's the best offer. he's the cheapest seller basically, right? So if you want to go ahead and buy Bitcoin, you're going to take this one and not this one. However, as traders come in and buy and sell, you can see the actual price moves. So if these guys are bidding here and they're actually not trading right now, a seller may come in, sell at 95, sell at 94.96, sell at 94, sell at 93.6. He may just hit all of those orders, right? And say, yep, I'm selling to all of those, right? And so that's how the price moves. So we can essentially trade just the same as them in a few different ways. So that's the order book and how it works. And this is the reference price that we can use to enter different orders that we may have. The first order type is known as a market order. This is where we actually don't choose the price that we trade at. We just choose the amount that we want to trade. And we are going to take some of these guys' orders. These guys are showing us their orders and what they want to trade at. So we can say, sure, I'm going to take your order and I'm going to exchange with you. This is like going to the airport where you have some cash and the exchange rate is given to you. And you say, sure, I'll take that exchange rate. Here's my cash. Give me the other side. So what we're going to do is press buy. We're going to press market order here. And notice that we cannot choose the price that we pay. We can choose the amount that we trade. So let's say that I want to buy some amount of Bitcoin. It is given to you quoted in the other side, which makes it easy, right? So if I've got a US dollar stablecoin, I know that I want to buy $15 of Bitcoin. So that's easy. You can choose a decimal of Bitcoin if you want as well. That's going to be a lot more difficult to work out. So it's easier just to say, I've got some USDC. This is how much I want to buy. And it's going to work out how much Bitcoin that we trade when we press buy. We don't know exactly how much Bitcoin that we are going to get because we don't know the exact price that we're going to trade at. What we're saying when we enter this order is buy immediately $15 of Bitcoin. So what we're going to do, the platform, the trading system will go over to the order book and it will take the best offer at the time that we press the button. Because this guy is telling us, I'm selling Bitcoin for, I'm selling my Bitcoin at 117.226 or 117.205. As you can see here, it changes around. Do you want to buy from me? When we press buy, we are going to take that away from them, right? So we're going to take their Bitcoin that they're selling, but we don't know the exact price that we're going to trade at because the price moves around a lot. So what we're going to do is buy market order $15, press buy BTC, check everything, and that will trade immediately because it's a market order and we just trade at the best price possible. So as we can see, we don't have any open orders. If we go into trade history, you'll see that you actually just bought $15 of Bitcoin right there. It was immediate. And the exact price that we traded at, we don't know, but we got the order done and we bought the Bitcoin. If you want complete control over the price that you actually trade at, then you can use a limit order. So choose limit up at the top, and you can see the price now is available for us to choose. So what this now lets us do is enter this order book at the specific price that we want to trade at. So we can now choose the price that we want to trade. Let's say that I want to put a limit order in at 118, so 118,000 per coin. What I'm telling the system is trade immediately right now as long as the price is 118,000 or better. Because I'm buying, we'll put an amount in here, right? So now it can work out the price, the amount that I want to spend. It knows exactly how much BTC that I can actually trade, right? So a fraction of a Bitcoin. Because I'm telling the system buy immediately right now for me as long as the price is at or better than my limit, it's going to trade immediately, right? Because the price is underneath this. You can see 117.212. So if I press buy BTC right now, this limit order will essentially go in like a market order. It's going to trade immediately, and we're going to buy this guy's Bitcoin right here because he's showing the sell side of the trade. That's fine if you want to do that, but it kind of defeats the object of a limit order. You may just use a market order there. What we can do with a limit order is choose a price below the current market price and hopefully wait for a seller to meet with us. So we're going to choose 117,200. And we're going to choose an amount of Bitcoin to buy. So we're going to spend 18, and this is the fraction. What we're telling the system right now is, I want to trade Bitcoin and I want to buy Bitcoin, but I'm not going to pay above 117,200 per coin. That's slightly below the current market price, right? So what's going to happen if we enter this order is the system will put that order in for us and we will join the order book down here. So I'm going to press buy BTC. Like this, you can see we've now got an open order. This order hasn't traded because my limit price is 117,200 and there are buyers willing to pay more than me. So a seller is never going to sell to me at that price. However, as you can see, the price does move around. And so if the price does move and come lower, there may be a seller that meets with me at this price, and then I will trade. As you can see, the price is moving down a little bit, so we may actually get this order done. So we're going to have to wait until the price moves in and a seller meets us now. So if they do, we can get this order traded. If not, it won't trade. I'm going to cancel the order out. So you can go to the right hand side here and press the bin button, cancel that. I canceled the order and I didn't trade. I don't pay any trading fees for that. You only pay trading fees when you actually exchange the asset. Now you can see the price has moved down. So we would have actually got our order traded right there at the 200 price. So we're below that now. So we would have actually been hit and we would have traded then. But I canceled the order before that. So no trading fees are paid. You only pay trading fees when you exchange the assets. In order to prevent mistakes when you're trading, you can click this toggle right here, which is known as post only. You can see that. What this does is it only allows you to put an order in if it can post on the order book. What that means is the order must post first and it must sit there and wait to be traded. If I put an order type in which won't do that, so it will trade immediately, then the order will be cancelled. This prevents any fat finger trades or crazy price trades. So let's say that I put in a trade here and I make a mistake. Instead of putting 100,000, I put 200,000. If it's a limit order at 200,000, that means that I'm wanting to buy and my limit is 200,000, so I'd buy immediately, right? Well, that's a mistake. And so with post only, what that will do is prevent you from doing that and prevent the order going in, because my order would trade immediately. Post only is going to say, nope, you made a mistake. So if I press buy BTC here, actually the price is so far away, there is another warning saying your price is wrong, right? So don't trade. So that's great as well. But you can put post only on if you never want to trade with a mistake here. It will only let me enter an order if my limit price is below the current price. That will then post onto the order book and everything will work okay there. If you want to sell out of your crypto assets, that's exactly the same thing. You can use a market or a limit order and you just want to press sell. Now, if you want to sell out of your asset, you have to be sure about which asset that you're selling into. So if you want to sell your Bitcoin back into USDC or USDT, choose that trading pair. If you want to sell out and actually cash out of Binance, you may want to go and find the fiat currency trading pair in your region so that you sell the Bitcoin or the other asset into your fiat currency. Then you have the fiat there that you may be able to withdraw. So just choose the trading pair that you want to buy and sell into. But buying and selling is exactly the same. So you can use a market or a limit order, no problem, like this. So let's choose an amount here. Now with a limit order on the sell side, we're now looking at above the current price to put in trades. You can of course sell with a market order. And if you sell with a market order, you're now taking this price below here. That's the best bidder, right? So they're saying, I want to buy your asset. Or if you want to place a higher price, you can do that. So let's say that I do now want to wait till 200,000 to actually go ahead and trade out. I can choose an amount of Bitcoin that I want to sell. And it's going to put that order in. So what I'm saying is at 200,000, if the price gets there, then sell $25 worth of Bitcoin. And it's just going to put that order in and wait until the price gets there. So let's sell BTC like this, and that goes in. That's a sell order, and that's not going to trade until 200,000. That's an easy way. If you've got Bitcoin and you want to sell at a certain price, you can just put that limit order in and just leave it there and wait and see if the market gets to your price. I'm just going to cancel that out. And because I canceled it, I didn't trade it. No trading fees are paid. Another order type that you may use on Binance is known as a stop order. You may also see this referred to as a trigger order or a conditional order, and you can get to it via this drop down. A stop order lets us trade in a slightly different way to limit and market orders. Most of the time with stop orders, it's on the sell side. So you've got the asset already and you're looking to put a sell order in. With a stop order though, what we can do is choose a price to sell at below the current price. This is known as a stop loss. And you may think, why would I want to sell below the current price? Well, let's say that you bought Bitcoin at lower prices around here. And so you're sitting in a profit and you're looking to sell and take some profits. But you don't really want to sell right now. You don't have to sell right now, but you really want to sell above 100,000, right? So you don't want to sell below 100K. And if the price gets to 100K again, you just want to sell there, right? You're like, okay, the price may be coming down again. I just want to sell at 100,000, but you're also happy to be in the asset right now in case it goes up and then you don't want to have sold right now, right? So you're happy to sell, but you can take some volatility to the downside and sell out here if you want. If not, you don't want to sell right now. If it goes up, then you obviously want to stay in the asset. We can't use a market order because we trade immediately. We also can't choose a limit order because if we told the system sell with a limit of 100,000, it's going to sell immediately for us because the price is higher than that. So how do we tell the system sell at 100,000 if it gets there? Well, that's where you use a stop order. So what we're going to do is put in the stop price or the trigger price. This is an instruction to the system to say, I want to sell, but don't enter my order until my trigger price is met. So we'll put that in at 100,000. In this way, we can now control exactly how the system trades for us, where we're not going to sell now. However, if the trigger price of 100,000 is met, our sell order will go into the system and then we'll sell. So you can choose how much you want to sell at that price. It won't trade right now because our trigger isn't met. Only if the price comes down to 100,000, our trigger is met and then our sell order goes in. In that way, we can sell below the current price if it gets there, or if not, then we will keep our assets. Hopefully they go higher, and so we can make selling decisions at a higher price. So with a trigger order, that lets us sell below the current price if it gets there. You can't do that with a limit or a market order. Now, you can choose stop market or stop limit. With a stop market, what you're saying is at the trigger price, enter a market order to sell this amount of Bitcoin or any other asset. With a stop limit, what you're saying to the system is at my trigger price of 100K, enter a sell limit order for me. Now, if your stop order gets triggered, the price is going to be 100,000, right? Because that's where the trigger is. So if you put in a limit price of 150,000, your order will go into the system. The trigger price is met, your order goes in, but your limit price is now 150K. The price is at 100K, right? Because it just got triggered. So you won't sell anything, but your order will be in the system and it will wait for the price to then go up to your limit price again. What's the point of doing that, right? So really with a limit order, you'll probably be looking at some price around this 100K. If the price is moving down, then you'll want it around 100K, maybe a little bit below, but you may as well just trade a market order, right? It's going to be simpler. But you can put a limit order in as well if you want with your trigger. So stop market, stop limit. It's the trigger that you enter your order at. This is mostly used on the sell side, having the asset first and selling lower, because if you're selling at a higher price than the current market price, then you can just use a limit order, right? You can say sell limit 200,000. It's not going to sell until it gets to 200,000. So you don't need to use a stop order there. You can just use a limit order instead. Another way to sell out and take profits, hopefully if we have them, is to use a trailing stop. And this is mostly used on the sell side again. And it's an instruction to the system to say, I'm willing to sell right now. However, if the price moves up, I want to trail my limit price and my sell price up with the price. If the price moves down, don't move down and just sell out. So this is a way of saying, I'm happy to sell here, but if the price moves up, then I'm going to take advantage of that as well. So let's say you've got some Bitcoin and this is the current price of it. When entering a trailing stop, you have to give yourself a callback rate or a delta rate, and it's given in percent. So let's use the example here of 5%. What you're telling the system is, I'm willing to sell 5% lower than the current price right now. If the price just falls down 5% immediately, I'll sell 5% lower. However, in bull markets, as the price range is higher, you might actually get a better trade by using a trailing stop. Because what happens is, as the price rises, your limit price for your sell order also goes up. But it keeps this 5% delta, this 5% difference. So my limit price is now higher than it was because the price moved up. Because I gave myself 5% breathing room, price moved up, and so my limit price moved up as well. As the price comes down 2%, my trailing stop doesn't move. So the price went down 10%, my trailing stop doesn't move. Nothing's traded because it didn't fall 5%. Now we go up again, my trailing stop moves and keeps that 5% delta. So my limit price has moved up a couple of times now with the price. So that's great news. I get a higher price for my trade. Now the price does fall and it actually falls down 5%. Because my sell doesn't move, I then sell out. But because I used a trailing stop, my price for the trade is higher. This is great with Bitcoin bull markets because I'm sure you know the price can really move up aggressively. So when you reach a price that you're willing to sell at and you're within 5% of it, you can just say, use a trailing stop. If I sell 5% lower, I'm still happy. If the price moves up a lot, I haven't missed out. So you can go and choose the delta here. So you can choose 1, 2, 3, 5%. Let's call it 5% here. And just put a market order in, right? So you don't choose the price, right? So just choose market. So my trailing stop is 5%. At 5%, choose an amount of Bitcoin to sell. If the price falls immediately 5%, we're just going to sell there. If not, then we can just ride up, and our limit price is going to, or our sell order is going to ride up with it. That's a great way of selling out in bull markets where you reach a price that you're happy with, but you're not going to miss out much upside if the price moves up as well with your trading stop. I've got much more in-depth videos about trading on Binance and using the Binance platform. I'll leave a bunch of them down in the description, and all of the trading and deposit bonuses on the exchanges I use will be linked down there as well. I'm James, this is Money GG. Cheers for watching, and I'll see you in the next one.